How does the old phrase fair and square relate to the global markets? Well, our chief equity strategist and economist, John Blank, explains that for us now. John, something tells me this has to do with events in other countries that traders are going to be watching.
Yeah, Terry, the one thing we want to talk about is the European lack of vaccination and the slowdown and the lockdowns that are going on there. Part of that is because the United States is producing its vaccines for itself, and the UK is also doing the same thing. So Europe has just not gotten exports of vaccines into the countries they need to get them into, and they're not producing their own. So this has created a huge divergence all the way into the financial markets. And now we've got Powell and everybody in Washington stimulating the U.S. economy, getting a boom going. The rest of the world is actually working in different circumstances.
Yeah, not to mention the latest news on that AstraZeneca vaccine, which is used overseas, right?
Right, and that is the Oxford one, and they blocked all of that. And that, yeah, it's just another complicating factor of separating different regions of the advanced world.
So you say April macro data is likely going to be market negative. Which data specifically?
Well, that's the U.S. data. The curious thing here is we've had all these 100 million households get checks in March, and they had checks, smaller checks in January of this year. And what happens with stocks is all of that's priced in. So the good news is not usually a positive; it's a market negative.
What other macro catalysts is there going to be to look out for in April? And is the pandemic among them?
Absolutely. So we just learned today that new claims for unemployment benefits fell to the lowest level since the COVID crisis began, Terry. So this was down 100,000 the last week ending March 20th. And that means good news, and hopefully this trend continues. We need to see the unemployment rate go down with these claims, and that's what we're going to be looking for.
So how does the fair and square concept tie this all up?
Well, what we got here is this idea that basically the United States is going to, do well, but it's not going to help out these other countries. So what is fair and square? You'd like to think everybody's rising at the same level. It's not happening this time around.
The news of February retail sales dropping more than expected, John, came in the wake of retailer earnings reports for Q4. Retailer earnings were relatively strong, though, but in light of the February retail sales data, is the going likely going to get tougher for these players in the coming quarters?
The answer is no, Terry. That was all weather related. And I think you should be thinking actually the other way and think for a rebound.
Given all the macro data that we've outlined, is this a time investors should be buying stocks, or should they be keeping their powder dry?
I am in the case where they should keep their powder dry. We've learned Cathie Wood's ARK Innovation ETF has been blown up. A lot of the speculation last year on the stay-at-home names like the Pelotons of the world, the DoorDashes, they're blowing up. So I think you just wait for the baby to get thrown out for the bathwater here and keep your powder dry.
How do you feel about the Fed not extending a pandemic crisis rule that allowed the banks to have lower capital requirements? Now, that was something that Wall Street had been lobbying for as a way to calm the volatile markets.
Again, Terry, this is just another one of the exit strategies. The Fed's moving away from emergency powers and rules they put back in March of last year. More good news, that's bad news. And this is the basic idea. The better the markets perceive the future, they'll sell off on that news, not go up.
Well, the bank stocks fell sharply on the news. Do you see the banks and other financials having a rough go going forward because of that?
No, actually, they're the one spot that are going to probably benefit. This is a short-term thing, much like the seasonality that came out of the retail sales. The banks would probably do well on this. They would be a buy because interest rates on the expectations of higher inflation in the future are going up, and they can play the short rate that's staying low against the long rate, which is going high, and bank profit. So bank stocks look good in this environment.
All right, other stocks that have caught your eye include Taiwan Semi, Peloton, that's a stock that's been in the news a lot lately, and Anglo Gold Ashanti.
Yeah, I want to point out these are not top-rated stocks. These are the other stocks that are going down. Taiwan Semi is a classic. This is a giant Taiwanese semiconductor foundry, very important to the semi names. It's off 140 in February down to 110, and it's falling. So If you can get a great entry point out of Taiwan Semi here in the next 2 months, that's what we're talking about, the baby thrown out with the bathwater. Taiwan Semi is beautiful. Now let's go to Peloton. Peloton is going from 160 to 110, 100. So you get a 50% decline. Unlike Taiwan Semi, I would not be a buyer of Peloton on the bounce because it's one of those stay-at-home stocks. So you got to separate Taiwan Semi and look for a bottom there, but not Peloton. Then let's go to Anglo Gold Ashanti. This is the big South African miner. I mean, again, Zacks rank A for value, A for growth, A for momentum. However, a number 5 ranked stock, it's gone from 25 to 20. Nobody's buying gold miners. So again, as the economy warms up, things like gold miners go down. So we've got 3 names here in this space, and they show you what we're talking about here. Taiwan Semi is the name you're looking for a bid on here next few months. These other 2 names, you are not.
Taking another look at macro data and its impact with our chief equity strategist and economist, John Blank. And with John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.